We've got a crack group for you as opposed to a crap group. So I'd like to introduce them to you. All-star panel. Matt Walker you've heard about. Matt's very keen on monitoring the state of the market. Kirsty Sheerin is the, what's the title? No. Anyway, Kirsty Sheerin is the head of resource estimation at Hot Chili and was previous director of the AIG. And for a resource geologist, her team won the inaugural Parker Challenge, which was at the MRE conference a couple of years ago, and took away a big check for that. Hope you shared it around, Kirsty. Yeah. Ivy Chen. Ivy Chen is a very experienced geologist. Let me just check. I know you, Ivy. Ivy is the managing director of GeoReg. She's also an associate executive consultant for Snowden Optiro. And Ivy worked for Optiro way back when. Ivy's characterised by, correct me if I'm wrong, Ivy, the only geologist ever to work for ASIC?
Well, the only geologist employed as a geologist. We've had geologists work for ASIC in various other capacities. Okay.
So the only geologist employed as such to work for ASIC. So that's when we'll be talking about that further. And the fourth person on the panel, who with the white hair, who needs almost no introduction. What's your name? Mark Murphy. Mark Murphy. So Mark is the what's your title? Manager of Geological Services at IGO. But Mark also is a former employee of Snowden. Was principal geostatistician for quite a few years. Also worked for Wood/AMEC. Glencore, Anaconda, Rio Tinto, and other consulting groups, which we won't name. And so Mark has an opinion. So I think has a few opinions. So we've worked out that everyone apart from Matt has been involved with the latest version of the JORC code. So what I would say to you is that we're not allowed to talk about it, really, and hasn't been released yet. So any questions on the JORC code, we have to refer to the draft, which came out last year, and which you've seen already in various things. So we're not really here to talk about the JORC code because we can't. So we're not allowed to. Anyway. So I thought I would just 2 slides before we start talking. I went to the market releases last week and I was hoping to find some gems in there, but I was a bit disappointed, really. So these are some quotes from market releases last week, and I've obviously censored them, redacted them. Located in a world-class gold district, compelling discovery opportunities, targeting, I quite like this one, targeting XX in the shadow of giants, which means we're 100 kilometres away from a bigger mine. XX kilometres from XX mine, you see that quite often. X% in the resource estimate, X% increase in the resource estimate, that's quite common. And then province scale opportunity. So they were actually quite disappointing. So what I thought I would do for you, and don't say that you don't get things when you take away here, I thought I would create for you a market communication toolkit. So if you want to communicate to the market, maybe or maybe not with integrity, here's the things that you want to see. Bingo. You want to say the XX, largest XX in the comparison group. So you can insert your words there. Open in all directions. XX kilometres of untested contact. XX project is a long strike from large project. Whatever criterion you want to use, it's bigger than the market peers. XX company expects further drilling to never to decrease, but to upgrade or increase the resource category and the contained metal. XX company has a world-class discovery. And when it comes to pictures, you've got to have the picture with your drill holes, and that's the red sort of polygon at the top. And the thing to notice is that it goes a long way beyond the drill holes. And you must absolutely have the red arrows there. And those red arrows are accompanied by the words "open in all directions." And the only thing I haven't got on there is a picture of the Earth, which shows the arrows pointing to the centre of the Earth. But so there you go. It's something for free. If you want to know how to communicate with the market, there's some of the words. Do you think there are a group of investors that might be swayed by some statements? In other words, do you think the promotional stuff is just par for the course? Anybody? Ivy.
Well, the promotional information has to be there. because you're a junior, unless your grandmother left you a pot of gold, you need to fund your activities, and a lot of juniors access the market for that. So they have to be able to talk about their prospects, but there is a hurdle, the reasonable basis hurdle in the Corporations Act. So by all means, talk about your prospects, but put everything in a context that's appropriate to the risk. I mean, that's it in a nutshell, but let's see what everyone else thinks.
Yeah, I agree. I mean, there has to be a promotional aspect to it. And I think we were just talking about when we were outside, you know, the industry that we have, you have juniors that have 50 million, you know, market cap, and then you've got the majors that have a 200 billion. So it's a completely different market, and we're all vying for the same investors, basically. So how do juniors actually advertise themselves? Because it's not about compliance reporting. We all know the legalese we have to have when we do our reporting, but it's how do we advertise? You know, we don't have the budget that BHP has, for example. So how does a junior actually put themselves out there and give a good name? And that's where I think, you know, things like LinkedIn, where we're seeing a lot more MDs and CEOs actually promoting their company. That's the way people are getting around doing it. But maybe that's where we need to do the more promotional statements and leave it out of the ASX announcements.
Okay.
Although that's public, so people still need to be aware that they still have to follow the Corps Act and reasonable basis and all.
Yeah.
Mark?
Yeah, so I actually gave this a bit of thought, which was different than just turning up and giving an opinion this time. So I wrote some stuff down, and I think it does matter legally and practically. You know, the thing is, there's those that know the market and understand the hyperbole and the promotion, but then there's a lot of investors, you know, these mysterious mums and dads they talk about. But they are out there who do make investments based on not the technical detail, but the sort of the vibe of what's there. And I don't think there's nothing wrong with promoting, but you need to put in the right cautionary stuff around it. So yeah, it's expected if you're trying to get attention, but you know, in doing that, you also risk some reputational damage on the smaller company if you don't do it right, because you'll lose trust. You might cause a short-term market spike or whatever, people lose money, and then there's this across the industry detrimental effect that you get this vibe that you can't trust these announcements, and I don't think that's what the industry really needs. That's enough from me.
Matt?
Yeah, I kind of echo what Mark says. I think, you know, the institutional investors really cut through this anyway. They already are backing a project because they've probably got a lot more information, and, you know, in reality, they've probably got a lot more information that's actually out there in the public domain. When it comes to the mums and dads investors, they're the people who get caught up in this, right? They get caught up in the superfluous language, and it's, you know, it should be presented in a balanced manner, but it isn't. I don't think we're going to get away from it anytime soon, and like Kirsty says, they're all fighting for capital, right? So they're going to hype it up. They're going to jump on the next, you know, germanium bandwagon or antimony or whatever is going on. So
Unobtainium.
So do you feel, any of you, that integrity is actually being sacrificed by these companies? I
don't think integrity. I think maybe it's like a crisis of faith in the reporting, I guess. Yeah. It's difficult because I don't think that the solution that we currently have, which from the ASX appears to be just slap more and more disclaimers and legal language on there. I mean, you know, is that helping mum and dad investors? You know, now they have to be experts in the technical aspects of an exploration project and, you know, legal language. I mean, I don't know if that's actually helping the actual problem.
On that point, no one seems to ever want a disclaimer on legal language. They get us technical people to disclaim the living daylights out of what we say, and these lawyers give you reams and reams of multi-syllabic words that nobody understands, but no one requires them to provide clear, concise summaries of their stuff. And I think that's part of our problem. People don't understand what we do as technical experts, so they expect us to provide words of one syllable to do it, and we can, some of them, some easier than others. But this requirement to disclose in a context is critical for us because we are talking to people who don't speak the same language we do. So we're actually providing our information, and then a translation as well.
So one of the things in the Corporations Act Matt talked about earlier on is this Section 3, which talks about continuous disclosure obligations. Do any of you, or have any of you seen any market releases that conflict with that continuous disclosure obligations, one way or the other?
Well, I've certainly seen companies that have drilled and not released drill results. For whatever reason, they'll say it's not material, that, you know, it was an infill program, it's not changed the materiality of the resource, and that's why we talk to that 10% kind of factor, or 5%, whatever you want to use. And then, you know, they'll turn around and say, oh, do you think we should release these results, or how can we go about doing it? Well, you're obliged to release this to people to make investment decisions. So it unfortunately does happen, right? So it is going on.
Yeah.
The other side to continuous disclosure is the need for that basis. So yes, there's an obligation as soon as it's material to tell the market, but it needs to be stuff that you've tested and checked that actually that assay lab's done the right job. The QA/QC on that assay is correct, and it's a valid number to be setting free in the wild, so to speak. So getting the results straight away, scooting it out to market because of continuous disclosure can potentially not be the right thing to do. And Matt's exactly right. Companies have to weigh up, is it material, and when it is material, to do that continuous disclosure.
Yeah, and there's a lot of obviously subjectivity to that. I mean, when you're putting together an exploration project as a junior, for continual disclosure, you have to take them along the journey with you, you know. And this is where I think, you know, sometimes juniors can get slammed a little bit because, you know, for example, for our exploration group, you know, they're amazing and they're very, you know, passionate and excited and by nature optimistic, you know. I'm not. I'm a realist resource geologist, but, you know, they're very enthusiastic about everything. But, you know, when we put out a release with a really encouraging geophysical anomaly and some exciting soil samples, we are excited about it. You know, we're not trying to be misleading. It might not go anywhere. 99% of exploration isn't successful. But if you don't put that out, you get slammed. And if you do, then you inevitably get slammed later on. So it's a really hard balance. And we all know that you don't find a discovery every single time you do a drill hole. So...
Okay, so you've got listing rule 3.1, which requires you to immediately disclose information that a reasonable person would expect to have a material effect on the share price. I think it's the magic words. But then they also say that, well, you don't have to disclose it if it's incomplete, right? Or speculative and not yet definite, or intended only for management. So there's kind of this seesaw that you can swing on. And you'll probably find the juniors, you know, first hit, they're going to put the announcement out. A major's going to wait till they've got a dozen drill holes before they get excited. So it becomes that dichotomy between a major who's a little bit more cautious, has big institutional investors, doesn't want to suffer embarrassment, versus the junior who really keen to get the news out there so they can get more funding or more interest. But, you know, having said that, I still think there's an element out there of, you know, the rumour gets out, the share price moves, the question's asked, why is it changing? Oh, we don't know anything yet. And that does damage. And again, it's that investor trust. It's catching out the people who are least, you know, wanting to get into the market because, you know, bank interest rates rubbish or whatever. I want to buy some shares, and they buy some blue chips and they buy some risky ones for growth. They get caught and hurt, and I think ATSIC and ASX are right to come back and crack down on that sort of stuff, because it's just not right. And it's still out there. We all know it's out there. Usually the driller is the first one who knows, and he's on the phone, you know, those sorts of things. So I think it's improved over the years, but it still needs work. So that's my thoughts.
So based on your collective experience of many years, would you say that there's an inverse relationship, say, between the size of the company and the integrity, however you define that, shows in public reporting? Anyone like to comment on that?
I think that's exactly the materiality that Mark talked about earlier. For a big guy, what's material could be multiple deposit scale information. For a little guy, one drill hole in their early exploration prospect is potentially material. And it's this materiality issue which, unless is clearly explained and well understood, can sometimes come across as big companies being a bit shady and dodgy and hiding behind being big, versus the poor little company that's forced to put everything out because they only have the one project. So it's a complicated situation as to, I would say it'd be difficult to say one was more or less on integrity, but that's just my view.
Yeah, I mean, there's such a disparity between, you know, the majors and the junior end of the market in terms of what is material, that it's almost a bit nonsensical to apply the same kind of standard, you know, in terms of materiality. And I think we all know you can have the negative view that, you know, I'm sure, you know, you've seen, I've consulted as well, where you have seen majors go, oh, well, you know, that resource got a bit downgrade, we didn't expect that, let's just mix that in with the other ones and we'll just cover it as the global resource update. You know, we all know that happens. And just at the same end, we know that the junior market, you know, they'll cover things as well. Like, you know, there is always going to be a little bit of that. But I just think it's harder for juniors because we're so constricted by the ASX communication, the compliance. You know, I guess BHP, for example, they have the ability to put out a huge, slick advertising campaign, you know, amazing. Resourcing the future, you know, that's great. We can't do that. We can't afford to advertise that way. I don't see the ASX coming and going, how exactly are you going to resource the future as a, you know, production targets, listing rule 5.19. It's obviously advertisement. Yeah. But this is where you have that materiality difference. They can go out and say that. It's not going to have an impact to them because they're more like a blue chip, you know, whereas we're at the very end. And I think people have to be realistic. It's exploration companies. It is going to be a high-risk venture. Same way as if you invest in startup culture in the tech space.
I think there's a lot more checks and balances that often go on with, you know, the resource side of things in a mid-tier or major company. And I mean, Nick was my colleague at Goldfields, and we worked there for many years, and we had a fantastic ore body, Wallaby, but we do an annual resource statement, and literally it'd be one line in an annual report, and you're talking about a multi-million ounce deposit, and it wouldn't move the dial at all. There was no interest in, because we're listed on the New York Stock Exchange, the bar wouldn't change. It was a very weird situation. You do all this great work, but, you know, the share price wouldn't move, wouldn't do anything. So, but it was just, please replace reserve, keep doing what you're doing. So,
but can I ask a question? You don't think potentially there's a subconscious aspect where we go, well, this isn't going to make an impact on the share price, you know, so I just won't do as good a job on this resource? You know, even subconsciously people go, it doesn't really matter in the long term. I mean, you'd hope that wouldn't happen.
No, well, we wouldn't. I mean, the checks and balances we went through was amazing, really, and learned a lot of craft there, which is still used today. But I think, if anything, we do probably too much, considering that it like you said, it gets buried in a
and it's devastating. You do all this work and then you don't see anything from it.
Yeah.
I suppose, no, we're all members of a professional association, and it's actually our code of ethics that keeps us honest. In that tiny little one-liner, you do exactly the same amount of work for that tiny little one-liner as you would for a multi-volume feasibility study, because it's our obligation, in accordance with our code of ethics, to do a professional job. So, big or small, we do. I believe that we all do the same
Definitely.
quality job, because that's what we do.
Yeah.
Just to give you a perspective, many years ago I used to work for a company called Western Mining. Some of you may have heard of it. Anyway, I worked at a Kambalda, and in those days Kambalda we had something like 9 or 10 nickel mines, and we used to prepare our resources, and we put a lot of effort into it, you know. Anyway, we'd present it to the general manager, a chap called Brian Hurley, some of you may have heard of. So we'd literally, and there'd be about 4 or 5 of us, we'd spend about 6 hours presenting mine X, mine Y, mine X. And we did this one year, and at the end he says, I don't care what you do, but I want 15 million tonnes at 3% nickel. You know, so you know, big companies, and Western Mining in those days was one of the biggest companies. So you know, it does happen. Maybe not so much these days. So another question: we're living in the age of social media. So you know, YouTube, Instagram, TikTok, etc. Do you think these methods of communication, have increased or decreased levels of integrity for companies? Anyone got a view on that?
Well, given all communication has to adhere to ASX compliance, I would say there should be no change but we know that's probably not the case.
I think it's like whack-a-mole. There are a lot more moles to whack, but they still have to make sure that every single one that's not the right mole gets whacked. So they're busier.
I think it's got positives and negatives. So I think it's very good in that the results get out instantly, right? Doesn't it? As soon as the ASX report hits the public, they start promoting it. So people, that message gets around quickly, which I think, helps control the spiking of the price, and hopefully that encourages a bit more trust around the place. But on the other side, these things come out often overly promotional on LinkedIn, and then there's a little link to the actual ASX release at the bottom, and you end up with my diagram here. You won't all be able to read it, but this circle here is what I'm excited about in my ASX release. This little circle here is what they actually read, and this is table 1 down here, so that's the Venn diagram for reporting as it currently usually exists. So I think the more you can start filling in at least those 2 circles, the better it is. So, yeah.
So what we've seen recently is companies posting pictures of huge spodumene crystals in lithium, and the equivalent would be companies showing pictures of native copper and fancy gold. Now we know in this room that's not representative. Do you think that sort of behaviour is unethical?
Well, the ASX has been cracking down a lot of that stuff, visual estimates, right? But I do still believe it's not the best thing to do to show core with bits of gold in it when you know that investors are large, and a lot of retail investors are in the market. They're the ones, most of the volume in the juniors, right? And they'll react to those sort of things. So whether it's unethical or not is probably a bit harsh, but because people want to show good results.
Yeah, and
but
nice pictures.
Without that proper explanation that, look, we're just showing you one of my pretty rocks, there is not a gold deposit here. You need to get that message through there as well. And I don't think that always comes across. I get very critical of companies that go and report a lot of rock chip samples, for example, because anything who knows about sampling knows rock chips are not samples, they're specimens, right? And I think that's misleading, and that's probably another practice that needs to be cracked down on a bit as well. But yeah.
I think if they provide the context, it's mitigated. If you literally say, these are rock chips, they're generally not representative, they're purely indicative. And that's an appropriate context for a rock chip.
Yeah, exactly.
So what we're seeing on LinkedIn particularly is the rise of what I'd call the JORC warrior. So we're talking about Mr. Roland Gotthard, who I read. It's quite riveting, and some of the stuff that Apaxi is doing. They're talking about market releases that are retracted. Do you think we're sort of keeping the bastards honest, or do you think that is more intrusive? Do we need more of it or less of it?
I have quite a strong opinion on this. I don't necessarily agree with what Roland does, and I think he does know his stuff in certain spheres, but then when you see him comment on some of the resource stuff, you're like, hang on a minute, I think you might have pulled the wrong thread here. And I'm always curious how other companies... I did see him do a redactment the other day, actually. Like, he'd obviously said something quite inflammatory, and he had to backpedal quite quickly. And I'm always curious, reputational damage done to companies, and they could, I don't know, can they sue him? I don't know, whatever. But I don't necessarily agree the way he's going about it, but I think it has made people think twice, potentially. So at the end, there is some intent there that's good. The delivery is probably not what I would do, but that,
each to their own, I guess.
Exactly. So
I think, sunlight is the best disinfectant, and I think there's been way too much opacity about reporting, ironically, considering what the JORC, code values are, about this stuff. So I think it's good. I think the more discussions we have about it, the better. And I like the Apaxi emails because it tells me what the ASX is focusing on. You go, oh, okay, they're hitting visual estimates this month, So you can see what they're actually focusing on. I don't think the discussion is a bad thing, and people want to put their reputations on the line, then so be it. And I think there was I can't remember the name of the company, but there was one that put something out against, I think it was Great Boulder. Anyway, I won't name names, but it was basically they pushed back and they said, no, like, I'm sorry, you're factually incorrect in what you said. And then there was a lot of people that were like, Andrew, yeah, good on you, you know. So it's like, it's keeping those bastards honest as well, you know. I just think more discussion is good.
And having those voices out there encourages a lot of people who might otherwise be silent to think about saying something.
Yeah.
And that's adding, again, more voices to the mix, which is all good.
Yeah, I was speaking to John Graingeorge earlier on, and John was telling me, and I don't remember the exact communication, John was saying that the ASX put out something that's saying, you know, you need to make your own decisions, you need to rely on these people rather than on us, as in the listings advisors, to pick up these issues. So, you know, is that the right thing to do? Rely on the warriors or the individuals? Or, you know, we talked about the mum and dad investors, and it's, you know, they're not going to know some of these issues at all. So, you know, is that the right view by the ASX, or should the ASX be employing more people, let's say, to review market releases?
I particularly like the Apaxi stuff because it's actually showing you the ASX is doing quite a lot. It's something we've not really seen before. I get those from Renee every now and then, and I'll send them out to the competent persons in the building. I'll send them to the company secretary. It's a really good educational tool to see, you know, what people are being pinged on and why they're turning over. And a couple of them you'll dig into and say, oh, that's really interesting.
Yeah.
So I think that's useful. And as for JORC WTF, I think that's probably not the right heading he should use. It's a little bit disparaging to the industry, and he probably should rethink that. But apart from that, I think he's doing a good service of looking into the detail of table ones and making sure people are actually answering the boxes correctly, and it relates back to the argument. I think that bit of analysis is a good learning model for some people, even though, as you point out, he sometimes gets the wrong end of the stick. And I'm pleased to hear that people are pushing. I pushed back at him once and said, stop your whining, and give me something more concrete.
But I think the ASX is regulated by ASIC, so they have an obligation to look up after the market to some degree. But people also have their own responsibility. This whole buyer beware thing sometimes gets a bit lost. And the Corporations Act expects people, all these things, to be reasonable, and they define the reasonable person as someone who's reasonably well educated but not a specialist. And if you're not a specialist, you should know that when you walk into specialized areas, to potentially consider seeking specialized expert advice when it's appropriate. When you're going to put in hundreds and thousands of your superannuation, it's probably a good time to think about it.
Maybe not your stockbroker, huh?
Yeah, exactly. Well, sometimes the broker is actually quite experienced, quite knowledgeable and qualified.
Sometimes
But
they're
not always, yeah.
Sometimes they're trying to promote the script as well. So
That's right.
you got to be a bit careful.
I mean, there is a double standard compared for mum and dad investors compared to, you know, private equity groups or, you know, analysts or something like that, where they can sign a CA and peek behind the curtain and get way more information. So there's always going to be that double standard. And I think, you know, we're not allowed to talk about JORC, I know, but I think something that I really pushed for when we were in the update guidance group was, I think the ASX should make it, or JORC should make it, that there should be a third-party review on resource estimates, particularly the maiden resource, completely third-party. You know, like, I'm sorry, if you can afford to put out an MRE, you can afford to have a fatal flaw analysis done.
So that's the 43101 situation in Canada. Yeah, the first maiden resource has to be reviewed and signed off by a qualified person who's in, and this person has to go and take samples and visit the site and everything. So one more question, then what I might do is throw it open to the floor. Just talking about codes, I noted the PERT code. Now, the PERT code is a European code, and this is the latest one to be updated in 2021. And you may recall that the JORC code has 3 principles. The PERT code has got 4 principles, and the 4th one that's not in the JORC code is accountability. Just a matter of interest, the 2017 PERT code, which is the previous version before that, it actually didn't have accountability, it had impartiality. Now that's gone. It's now replaced by accountability. So my question, I'll get onto it eventually, do you feel that there's a conflict of interest between being an officer of a company or a shareholder and being named as a competent person? Have any of you ever been in that situation? You don't have to answer that. But
Well, by definition, there is a conflict of interest because you're working for somebody who's paying you. You might have a salary arrangement, which is a bonus. Some people have substantial holdings in the company, so you can declare that, but you're still always going to have this suspicion by someone else that there's an incentive for you to make results more attractive, so on and so forth. Certainly, the example, my situation, the amount I'm getting in relation to the value of the scrip is probably, most people can see that's immaterial, but smaller companies, that can be very material. So, to some extent, there's, especially when we're talking about resources, the SK 1300, for example, you have to have a fully independent report by people who are legally liable if what they say doesn't happen within bounds. And, if there's big money involved, I think that's probably where we should be, right? And I know a lot of people don't like that because it's expensive, it takes a lot of planning, there's a burden, but, to me, that's probably the gold standard now across the world, ahead of NI 43101, and ultimately I could see the future going that way, particularly if it's the US that's driving it.
I think until then, we have that combination of JORC where you're required to declare any potential, any clear conflicts, any potential, and any just perceptions of conflict. It all needs to be declared. And the counterbalance will be our professional code of ethics again, which in theory hold us to that standard of objectivity despite all these perceived real and other conflicts.
Yeah, I mean, just because there's a conflict of interest doesn't mean it's going to be used in a negative way. Yeah, exactly, yeah.
It's that clarity that's important, the transparency.
Yeah, what is that saying? If you don't have any conflicts of interest, you've got no interest. So people are always going to have even a subconscious interest in a project. I don't think it's necessarily a bad thing. But this is where, I think we should have, particularly for that maiden resource, because we all know the biggest downgrade comes from the maiden to the subsequent upgrade, particularly with gold, when you go and infill drill and everything went away. So that's where the biggest risk is, I think, for investors. And that's where a lot of it could be.
That's a really interesting comment, Kirsty, because I was doing some analysis on a company a couple of weeks ago, and I looked at where were the bumps in share price. The biggest bump in share price was about their fifth drill hole, right?
Yeah.
And then by the time they got the first resource, the bump was about a third of that, and then they actually put out their feasibility study. It was like 5%.
Yeah.
So it just shows you the risk in terms of risk-reward profiles, somewhere between I've found something and here's my first resource. So it makes me wonder. I found something, and this brings me to the Perk idea, and that's been going around the internet at the moment. Pre-resource type numbers. Is that something we should be reporting now? They got kicked out of JORC a long time ago, but if you look at that zone where most of the value is made for its shareholders, there's nothing in there at the moment, and I do wonder about that.
I think they're speculators, those people. I don't know if they're investors.
No, they've made all their money at that stage, and then they'll get out. You go into that dormancy phase, right? And often boring by the book companies don't get any reward for doing the proper job. I mean, I'll just comment on the last question. I always find it fascinating when you see a mineral resource statement go out, and obviously there's the board of directors, and there'll be a certain incentive plan for them to have X amount of resource. And you can go and quickly qualify that by going to the annual report, see what X director and see what their short-term incentive plan is, check off the resource number, and lo and behold, it's 1 ounce higher than than it kicks in at. But so I mean, it does happen, right? But I think institutional. So there's another scenario as well. I call it resource overinflation, and you see how a company will. We saw it in just before this current gold rush. You'll see companies that, it was a bit unloved for a couple of years. Like everyone got excited about lithium and nickel, 22, 23. You had genuine, gold companies they'd done a lot of drilling, and they'd build up a resource. They'd have a massive resource base, right? You're talking millions of ounces. But You know, look at them now. Like everyone's poured over that data. Like everyone's seen the data, but no one's bought the company. Even regardless of how much measured and indicated they're declaring, people are still not buying that company. So something's not quite right there.
Okay, so I've got lots of questions. Oh,
Before you leave
yeah,
that
sorry.
last one, just going back to Perk and them chucking out
Impartiality.
A plug for the Valmin code. The Valmin code actually has independence and reasonableness worked into it as well. And that's part of our reporting system, because Valmin is the technical assessment and valuation of mineral assets. So something to bear in mind.
Thanks, Ivy. So, has anybody got any questions for the panel? Is it Valerie?
I'll start with one. Hey guys, thanks for your comments so far. I'll start with my one question, and if there's time, I'll ask my other question. The examples I'm thinking of are mostly Canadian examples, but maybe there's situations here as well, where a junior mining company just drills and drills and drills and drills and drills, and despite obviously having enough information to put out a mineral resource, they don't. So going back to the theme of, are we communicating with market integrity, do you think there should be an obligation for people to disclose the next steps of studies when they clearly have enough data and information to do so? Or do you think it should, as it stands right now, just be left to the company to decide when they think that they should communicate those next levels of information and study? So moving to a resource estimation or a scoping study or something.
It's a very good question. I think it's going to be a really hard thing to police if you think that they have to do it after a certain number of drill holes, because there's just so much variability. But I think it comes back to Matt's point in that, you know, everyone's just trying to ride that, you know, cost benefit on the curve. We know as soon as you get an MRE put out, that's a line in the sand mark, and that's it. You got to keep going up on that same trajectory, which we know is very, very difficult to do. So I can see why companies do it, to keep, you know, so they don't have to do dilutionary fundraising. But yeah, I mean, you would hope that there would be investors savvy enough to go after a while, you know, maybe you don't actually have anything here, you know. So it's one of those things where then you get out and you go, you've taken it as far as it's going to go, and you make a personal decision. There's that accountability, you know.
And the shareholders sometimes will question the management to say, hey dude, you've taken this much money, you've drilled that many holes, when are we going to see something? So it's not entirely up to just the regulators or the technical professionals. Everyone in this market should say something, because they can.
I think you got to be a bit careful there, because sometimes it's a deliberate strategy, right? Yeah. So there's a strategy that we're finders, we're not developers. And it's a bit like, once upon a time, you went to buy a house, you knew how much it cost, they'd advertise it. Now you say it's for sale, right? And you put out all the numbers, and you know, if you're putting out all the detailed information, you'll find people are building models and doing M&A evaluations. And there was one very large $1.6 billion event last year, the year before, which was basically handled like that. And I think that was a good value strategy for the shareholders in the end, and they never published a resource. So I think when you see that sort of thing happening, you've got to question what the strategy of the company is. Yeah. Are you investing in that company because you want to get out now and best money they can when they get bought out, or would you prefer to invest in a company that's going to develop a mine and then I'll have dividends down the track? So it becomes a sophisticated investor understanding, and again, it's probably a little bit unethical for the smaller investor who doesn't really understand those nuances. But, you know, there's nothing wrong with it, I can see, because it was pretty clear to me what was going on in that situation.
Because if we were to mandate X drill holes and you must publish, it takes us into a system that's very similar to what's used in Russia and China, which is incredibly prescriptive and doesn't actually allow for geology, really.
Mm-hmm. Yes. Yeah, good question.
Yeah. I've got another one, but I'll let someone else share.
So there's a lot of talk about the competent person's role in this, but where does it step from the competent person to the board in terms of what's put in a release? Because there's a lot of it comes back to people like Roland talking about the CPs, but ultimately it's the board that signs off on the release as well.
Yeah, I'll jump in on that one. But, the competent person signing off and taking accountability for the section that they're looking at. We have this argument every time when we do an MRE. It goes to the company. There'll be the natural back and forth, tempering the language, we call it, and you're trying to keep it fair and objective and balanced. And they'll always put their corporate spin on it, and I get it. It's part of the game, unfortunately, and you have to do it to get investors excited. But yes, you're right. It's the governance of the board should be. They are responsible for that.
I think the way the law works is that it's put out by the company, so the board's on the hook. And if the board gets pinged and they get a corporate fine or anything else, they can then go after the competent person. But generally speaking, unless the competent person has proven to be incompetent and totally stuffed a job or it deliberately stuffed it up, any action is against the board first and always.
Yeah, exactly. I mean, the board has a fiduciary responsibility to the shareholders, obviously. But this is where you have to have a lot of trust between the CP, and the board as well. And, we've seen it both ways where you've had, and I've seen it, with juniors, where you're taking advantage of a probably more inexperienced CP, and they've gone, well, no, this is the number that we're going to have, and they go, oh, okay. And then that's, this is where we're trying to strengthen competent person as part of the JORC update. And then it goes the other way where, as a consultant, you feel very constrained because you go, no, I'm not going to push on this. And then it comes back to, well, we're not going to pay your bill and, all of those fun discussions. So it just has to have a lot of trust and I think a lot of transparency about exactly what has been done and why it's been done, and more support for competent persons, I think, in general.
Any more comments or questions for the panel?
Just on that, the ASX is pretty clear. I think guidance note 14 or something says you've got to be careful with the language that you use. The important part is, a competent person has got to see the final release, not sign off on a part draft of the first release. So they've got to actually agree with the whole release, just not that bit they added to. And I know some consultancies actually write that into their contracts.
Yeah.
So they've got to see that, and it always irks people because they always wanted to get stuff out in the last moment. But you do have that stick. And the other thing I'd point out is that where I've had disagreements about wording, I have gone to people on JORC and said, I'm having this discussion. What would be the JORC? And then I come back and say, look, I've got an opinion from JORC, and they think, this is the way we should go. And I think in the industry, you've got those tools and contacts, use them. Okay, sometimes you need a stick to push back, and sometimes it needs to be authoritarian. I've even pushed them at times to actually go and speak to the ASX on this matter. I said, you need to talk to them about that because I don't think that's right. And they followed up, and that's worked out well.
So, Kirsty, I've got a question for you.
I think there was
one more.
Oh, sorry.
I think this is more of a statement than a question, but I'd be interested to see if there's anybody that agrees with me. I just think with regards to communicating with integrity, I feel that often as geologists or perhaps as resource geologists, we don't necessarily communicate internally within our own companies with too much integrity sometimes. I feel that perhaps, particularly with MREs, like for instance you were saying with the Canadian NI 43-101, having a check estimate or a fatal flaw. I mean, I've seen examples of MREs which are, clearly cooked, but the numbers or the resource estimate itself is obviously reproducible, but the underlying geological model is fried. And I think that too often, maybe those of us of a technical ilk just abdicate responsibility from a sort of appropriate degree of scrutiny on the underlying geology and just focus on the numbers. This is just my opinion, but I'd be interested to see or hear whether you have a similar sort of train of thought there, because, yeah, I mean, looking at various different mineral resource estimates that have been completed by often sort of third party or consultants, which are often most used by juniors because they don't have their own technical expertise. I mean, it doesn't take a genius to see that they are fundamentally flawed, and it doesn't seem to be communicated back to the junior or whoever it is that the client is. And I think that's a failure of integrity. Within geoscience in general, that doesn't even bring the market into it. So
I'll jump in, and purely personal view only, that in a lot of those cases, if the MRE is fried, the clarity of disclosure in the table 1 generally shows it off, and it sticks out like the proverbials. What's missing in that circumstance is potentially a closing summary from the competent person that prepared the estimate to say, hang on, this is not the best estimate in the world, these are its flaws, but this is where it's good, and potentially put it out there, warts and all. The lack of integrity comes in not doing the warts and all disclosure potentially. So it does happen, I agree. And it's by other people pointing at it and going, look, that isn't right, that needs attention, and that sometimes helps.
Yeah, I'd say I agree, and I've had that experience as well, where some companies, there is a siloed, maybe intentional, maybe unintentional, between people doing the geological interpretation on site and the resource geologist doing the final product, and that's something we've had lots of discussions about. So yeah, sometimes it can just come down to the structure of the company and what the company values, really. But I don't disagree with you. What came out of the Parker Challenge that we were in, and the one just this year as well, is that we still have that issue between a resource geologist really understanding the geology, and it all comes down to the ore domains. And following that all the way through, because it's that compounding error, and I guess you could say it's compounding lack of integrity as you go along as well, lack of a better term.
So Kirsty, while you're there, so you work for a junior, and we tried hard to get someone who works for a junior on the panel that isn't at Diggers today.
You're lucky that I had a baby and I'm here.
In your market releases, do you ever have an internal consideration of whether you are factual or realistic, or is there a conscious effort to communicate upside?
I don't think the two are necessarily mutually exclusive. I think it kind of comes to the continual disclosure thing again, where, I mean, we're in a unique position, Hot Chili, in that, yes, we are a junior, but, we've just released a PFS, and we're, moving very quickly towards that developing status. So, in the span of 2 weeks, we'll be putting out an exploration update as well as a study update, so we've got the full gamut, and we are also dual listed, so we have the consideration of ASX and the TSXV. We haven't made it easy for ourselves. So I would say, obviously we're trying to be as realistic as possible, and we have a team of lawyers here, and we have a team of lawyers in Canada, and I would say we spend 50% of our time doing the technical side of things and making sure that's all, correct, obviously, and not too promotional, and being realistic and all that. And 50% of the time is spent arguing with the lawyers on what language to use, and we can't say ore domain, and we can't, so I would say it's a mixture of both. But Ben Platty's here, he's in my team, and he would probably agree with me how much time we actually spend on the legal language as opposed to the technical side of it. So, the joy of it really kind of goes out the window. You just spend all this time doing pages and pages of disclosures.
Okay, I got a question for Matt. So Matt, you worked for Snowden as a consultant for, say, 3 or 4 years, but before that you worked for Northern Star, Goldfields, Barrick, so quite large companies. Do you, and since you've been at Snowden Optiro, you've worked for some more junior companies, let's say. Have you noticed a difference between what you were producing at your big companies you work for and some of the stuff that comes in front of you for the junior companies?
Absolutely. I mean, I've very fond memories for all the companies I worked for, and Kirsty was
especially Northern Star with your manager.
Kirsty
that
was
you
my
had there,
boss.
yeah.
The element of peer review that does go on, and Goldfields was particularly fun for me, and it's the same. It was a similar situation where we'd sit down with Winfred, right? He did his PhD under Danny Krieg, and you're trying to defend an MRE here, and he gets the big picture. He's like, that's fine, but that was a big period of time. You did a big tranche of work, and you'd be like, right, I'm really proud of this. Go and defend it. But it absolutely made for a really quality product, I thought, and you still hold those values in the way you conduct your work now. With the junior side of things, often you'll be dealing with a technical specialist in the company. It'd be an exploration manager who's not necessarily versed in resource work. So you're trying to communicate to him the risks inherent in the MRE, where you'll say, oh, you haven't got enough density data. They're like, well, no, we've taken 6 measurements. What more do you want? And then you're like, well, we're trying to classify this a certain way, or can we view your QA/QC report? Oh, I thought you were going to do that for me. Okay, well, we can, but it's going to cost you. So there's a lot of nuances that go on, and a lot of time it's educating those guys as well, and it's no fault of their own. It's just they're not in that sphere that we are every single day. Driving the computer software, doing the checks and balances, presenting the sensitivity testing. And they're amazed really at the end of the day that what work comes out, and they're like, well, okay, wow. Sometimes it's not the answer that they want, and then you start trying to reconcile the differences and come to some sort of agreement or whatever, but that's where you have to stand firm. And luckily within Snowden, we're of a big enough company where we can push back on those certain situations, and that's where I alluded to it in my presentation, that the engagement between the company and the consultant, having that scope of work is literally your last line of defense for what you've committed to. And saying that you need to review the document before it goes out, all of the other ancillary stuff that always ends up happening, defining pit shells are going to be run, because they suddenly say, oh, I don't want it in a pit shell, and you're like, well, you signed an agreement here that says we're going to run an MSL or a pit shell. So.
Okay, so final question, and this is to the three of you, that's Ivy, Mark and Matt, who were consultants. Have you ever had a conflict with what it's sort of the same question that Matt just answered. Have you ever had a conflict with a client? And without naming names, how was that conflict resolved? What are the techniques that you used to resolve these conflicts? Matt talked about going back to the scope, but were there other techniques that were used?
I just talked to that point again. You're only as good as your last game and your last MRE you get put out, right? We're all in a very, very close circle. There'll be, and I'm like, how do you manage perceptions? So a resource goes out. Company X, we've done the resource for Company X. Company Y is a neighbor. They're going to look at it and go, there's some value here. But if they've put a resource out that's not quite up to scratch, Company Y is not going to be interested, or they're going to say there's too much risk here. We're not interested. So are you trying to sell an asset to someone else? And everyone's work gets peer reviewed. Different consultancies are looking over different data sets. Like you got to do the right thing, really, because comes to bite you in the arse. So
yes. Often.
Constantly.
There's several situations. It's usually when something comes to you pre-prepared, and then you've got to take that theoretically as is and move it along, and you have issues with the kind of what you've spoken about, and it becomes difficult. It's flawed, but is it good enough? Or actually, it's so flawed I can't move forward. Type scenario, and that can both be in a consulting role and within a company. So it's tough. I usually push then to get a third-party umpire to come and have a look, and cross your fingers and hope they agree with your opinion. But that's usually a pretty good technique, because in the end, you find out that, okay, maybe you're being overly harsh, but on these things, you're actually something that is a valid valid concern, and I found for consulting side clients are usually okay with that, even though they end up paying more money for it, because that's the key thing. It's sorted out now before it really costs you later.
Ivy, any experiences you'd like to relate?
I think I totally agree with what the guys have said. It's always that context where if you tell the client that this is just not going to fly given how everybody else generally does things and you want to do it very differently, it's just going to be a major job to make your case. And I can cheat because I work for the regulator, and I can always use that as the ultimate. You're not going to get it past the regulator, but that's not something that everybody else can use quite so readily. But still, rely on a lot of the ASX guidance, JORC guidance, and also ASIC guidance, because they ultimately always go back to the reasonable basis, and our reasonable basis is the JORC code. So if whatever the client wants is not consistent with what is generally accepted as good practice, they may have a case, but their case will need to be made very, very clearly, and that uniqueness clearly identified. And oftentimes that's where it fails. Their very, very unique baby is just not that special, and you just have to get them to realize it.
I guess their case is that they're paying the bills for the consultant, so that's an issue. Look, I think the bar is calling, so I'd like to thank my esteemed panel here, Ivy, Kirsty, Mark and Matt, and please thank them.